Hello, hello, OFP Nation,
Hello, everyone. Welcome to another episode of this Forex Focus podcast.
where we talk all about mastering the art of trading with a strong mindset. And this week we have our 17th episode,
Yes.
which is all about what, Andy? All about what?
All about what? I think this time you can tell it because I always say it, so maybe let's make it a little bit different.
This week is all about technology and how technology can be leveraged to help us in our trading journey. And also how it can help us have a little bit of confidence too in our
Yes.
trading decisions. So that is what we're going to be talking about today. But before we dive in, we want to give some of you guys some time to kind of hop on and join us. For those of you who are watching the replay, hello,
Mhm.
hello, welcome. Thanks for coming
Hello.
by and seeing what we're all about. And let's give folks a few minutes here before we jump
Yes.
in.
To let everyone join us in this live stream. And also, we have Barry with us today. So, we're going to have a real interesting conversation about the topic of today. So please be free
Definitely.
to leave your comments and anything that you want to tell us, guys. Yes, please do.
All right. By the way, Andrea, you look so beautiful today.
Thank you. I got a
I,
new camera.
you got a new
I don't know
camera.
I don't know if you guys can tell, but we are really committed to, like improving the things that we use to make this podcast. So, yeah. I hope that you guys like this new image and like you see the colors in the background a little bit brighter and like better. So, hope you
Definitely.
like it.
Definitely. And by the way, speaking of our podcast, in the coming weeks, you will see our podcast on Spotify.
Yes. We are really
So
working on that
Oh, really?
to make this podcast bigger. Yes.
definitely. Barry, did you say something, my dear friend?
Yes, I was like, oh, really? Nobody told me.
Oh, Barry didn't know we were going to be on Spotify.
Yes. We're
Interesting.
working
I
on
was
that.
just, mhm.
Hello, hello.
Hello. Hello.
Thank you for joining
Hello.
us,
Is it Abidel? I don't know. I don't know if I'm pronouncing it correctly.
Abidel.
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 Yes,
Yes,
it's live.
we are live.
We're live.
We are live. Yes. All right. Well, we've given everyone a few minutes to kind of join us. Abidel, it is a pleasure to meet you and have you with us live today. Thank you for joining us. You are a
Yes.
new face, but of course, new faces are always welcome. And if there's
The
anybody else here who hasn't, who's been hanging out with us every week, please say hello. Let us know who's with us in the comments. In the meantime, we are going to go ahead and we're going to get started with today's topic, which, in case you missed it, is all about trading software,
Mhm.
and how that can be leveraged in your trading journey. Um,
Yes.
no, Abidel, we do not live trade, but we do market analysis every Sunday and every Wednesday at 10 p.m. Central European time. Sorry, Central European time.
Mhm. Yes.
Uh, so we do our live market analysis. That's typically just us kind of looking at our watch list and marking up our charts and kind of getting an idea of where certain pairs are going to be moving in the week ahead. So you are always welcome to join us for those on Sunday and Wednesday. But today is all about, talking about our different topics. Every week is something different. Most of our topics on this podcast are centered around mindset in trading, and some of the challenges we face as traders and the things that we learn. We kind of share those things with each other, what we've learned and how we can kind of overcome some of these common challenges that we face as traders.
Yeah. So
Hey,
it's
Moby.
hello.
Moby 1991 is in the building. Hello,
And
sir. Or ma'am. I don't know.
yeah,
Sir.
and he says, you guys are really,
Dot, dot, dot.
who
Dun,
knows? Let's hope good or whatever, like something positive, right?
dun, dun, dun.
But yeah, like Raz said, this is not, we do not only speak about trading because we want to take things to the next level and actually take into consideration the importance of having a strong mindset when trading. So that's why we talk about different topics that might help everyone involved in the trading community. So please feel welcome, and we are really happy to chat with you every single week. Yes.
Beautiful. And Agostinho just chimed in. Agostinho,
Hello.
hola, my friend.
Hola. Hola.
Welcome. And Moby, congratulations on the purchase of your new account. We hope that you find success here with us. Please,
Yes.
please, please stay connected in our Discord community. Ask questions. There is no such thing as a stupid question. Ask all the questions you need to ask so that you can find success here with us at OFP.
Yep.
All right, Andrea, ¿está lista?
Are you? Yo estoy lista. I'm ready for my questions. Are you guys ready for my questions?
Very
Yeah, I was born ready.
perfect.
Perfect. Well, the first question that I have for you regarding today's topic, like talking about technology and how it can be involved with trading. What are some of the key trading tools and technologies that traders should consider incorporating into their routines?
I almost forgot that I was muted.
Mm, yeah, I saw, but
Um, okay, so let me look at my notes because I did write some notes down so that I didn't forget because the older I get, the more brain cells I lose. So bear with me, guys. Bear with me. Let's see. Where did I write it? Where did I
in the
write my
meantime, I can repeat the question because Avidel asked me to repeat it. I asked to
okay.
Barry and Rhea, what are some of the key trading tools and technologies that traders should consider and incorporating into their routines? All
Beautiful.
right. Yeah.
I remember now, y'all. I remember. I needed a memory jogger. Okay. So first thing that I thought of right away when I was contemplating this is a calculator. So what do I mean by that? And I don't know, some of you might be, I don't how long some of you guys have been trading, but when it comes to having a trading calculator, this I'm more so thinking along the lines of calculating risk when I'm making a decision to execute a trade. So a common tool that a lot of traders like to use, especially myself, I've been using this for years, and that's my FX book. Does anybody use my FX book? Has anybody ever heard of it? Let us know in the comments below. Um, let us know. Let us
Yes.
know. Let us know. Do you guys
Let us
use
know.
my FX book? I utilize my FX books for the purpose of helping me calculate what my risk to reward is going to be in a trade. This is so, so important because it helps tremendously. Good, Avidel, you heard about it. Do you use it? Do you use it at all? Okay, that's good. Moby, that's good to know that you've never used it or you've never heard of it. Okay. So when we're trading, right, and we're making a decision to execute a trade, we have to
Mhm.
know before we get into that trade what our risk to reward is going to be. We have to know how much are we willing to lose in order to gain this much. I'm going into a trade, I'm willing to risk to lose $100 for the opportunity to gain $200 or more. So having
Mhm.
a tool like my FX book that has a calculator on it will help me to be able to know what my lot size should be, right? I actually do get a lot of traders that ask a lot of questions about what should my lot size be? Should I always use the same lot size? And the truth is,
Mhm.
a lot of times your lot size can change depending on how many pips you're risking, what your risk is going to be. Um, So my FX book is a really, really, really great tool specifically for that. It's specifically for like Forex pairs. You could also use it for gold. So if you're someone who likes to trade gold or silver, you can also use it to kind of help you figure out, okay, what's your risk, what you should be risking, and what your lot size should be when you're executing a trade. Barry has a tool that's similar. Barry, what's your tool?
Want to talk about it?
Are you talking about the margin calculator?
Yes.
All right.
Okay, no, you can find that on my textbook. It's there as well. I can say it's important to have like a margin calculator when you're trading exotic pairs mostly, because of course the major pairs, everyone knows like 1 pip equals to like maybe $1, everything that's just pretty straightforward. But when it comes to exotic pairs, we're talking about Russian ruble, we're talking about South African rand, we're talking about Indian rupee. They all have different margin requirements. So you have to adapt to that. So, for example, you can have a trade on, for example, on rand, South African rand, like, and that may take a lot of margin. Then you might see an opportunity on the pairs you usually trade, like maybe gold or pound dollar. Then you find your platform says you do not have enough money, but the lot size that you're using is actually quite small, but the margin is actually a lot. So you need to also take that into consideration to know how much margin your position may use, and also to also avoid margin calls. Yeah, you need to know how much margin overall you use so that you avoid margin calls and stop out and everything like that. So yeah, it's only a long time ago, like in the 90s, that most people would really pay attention to margin to avoid margin calls, because yeah, back then leverage wasn't as crazy as it is now. So yeah.
Definitely. And that's such a good point that you're making, Barry, because I personally don't
Yeah.
trade exotic pairs. So I've never really had to be honest, y'all, I've never really paid attention to margin like that. But that's because, again, I guess maybe I've never really had to that much.
Mm-hmm.
So I guess it just depends on what you're trading. I would also say too, if you're someone who likes to trade indices, like for example, the US 30, um, you may need to maybe Google or research a calculator for that specific instrument to kind of help you with figuring out lot sizes and risk and things like that associated with those pairs. Um, yes, Avi, that Forex Factory is great for knowing news, and kind of have an idea what news releases are coming out. I don't know if I've never really looked deeply into what other tools that they have on that website besides just kind of staying up to date with news releases and things like that. But of course, using something like my FX book, for example, has been really helpful with being able to just stay consistent with my risk to reward and making sure that I'm using proper lot sizes when executing trades. Um, that was a lot, but that's obviously not the other tool. For example, let's see, alerts.
Mm-hmm.
Alerts is another one. And then, of course, if you want to get outside of things like that and more so look at, what kind of tools you might use on your chart. There's
Mm-hmm.
different tools that people like to have on their charts. Are things like indicators necessary to be successful? No, but um, traders, there are many of us who find certain tools on our charts, certain indicators that we might use, tools like Fibonacci retracements, things like that, that are really helpful with helping us to identify certain things when we're trading, which we can maybe talk a little bit about that as we go on. Um, so yeah, I'll be quiet now.
No, I think you both of you guys gave some like a lot of information, but obviously it's always good to know about these things and to learn something new, because I think you both of you like answer my second question, because I was going to ask like how can traders ensure um or sorry, I was trying to ask like how can these tools help traders make more informed and disciplined decisions, but I think you already answered that because of all the details that you gave, by the like the benefits that have uh like what you can get by using these tools. So let me advance. Let me go on with my questions that I have prepared for you. um okay, so now talking about mindset and like mental stability when trading, what are the mental benefits of using this technology? Like let's twist it a little bit, to not like just talk about which tools and why is it important to use them, but now on the other side, like why are they important to improve your mental health or your mindset? That's what I mean.
Um, so that's really, really good question. I would say that for a lot of traders, it's the benefit of having something called confluence. Is it confluence? Is that how you say it? Um,
I think
it's more so kind of like confirmation, right? Providing you a sense of confirmation that what you speculate price to do in the market, it's more highly probable to do that. And so
Mhm.
from a psychological perspective, it kind of gives you more confidence. It kind of helps you have a little bit more confidence with executing your trade, you know, and then also kind of helps you hopefully be a little bit more calm too. When you're confident, you're calm, and you're able to just go ahead and execute your trade. So that's one thing that I think about. Barry, I don't know if you want to add anything.
No, nothing on my end. I think you've covered it all.
Okay. Thanks, friend.
Yeah.
Thanks.
Thank you, sir.
Okay, and now like yeah, I think you gave a really good answer, and I think we can say that this can avoid becoming like overly reliant on technology and maintain a human touch in their trading. I don't know. What did you think about it?
Um, hmm. I mean, obviously, to be more successful in trading, it's better for you to understand how to analyze the charts yourself, right? Um,
Hmm.
Having tools, especially tools like indicators, they should only be there as kind of like the cherry on top of an ice cream sundae, you know? It's
Okay.
the tools are not the whole sundae, but they're
Right.
like the tool on top of the sundae. I mean, the cherry on top. You know what I'm saying? Come on.
Yeah.
Uh,
Yeah. Yeah. Yeah.
so they're just there to kind of help add to what you're already analyzing, what you already understand of price action or market structure, you know? Um, so
Yeah.
never should we ever just count on, oh, okay, well, I'm gonna get in when the EMAs cross here and when it closes on this side here, and then I'm gonna get in. I know to sell when the RSI is overbought. So I'm gonna,
Yeah.
because it doesn't always work that way, right? The tools are not perfect. They're not always 100% accurate and on point and on time with what's happening with real live market data. But having them in addition to your own analysis, your own understanding of market structure, your own understanding of price action can absolutely help you have confirmation of what you
Hmm.
speculate so that you could feel more confident in making a decision and executing your trading decision. Very darling.
Yeah. So it's like a support, let's say, not the whole thing, not the whole Sunday. If we're continuing with that metaphor, like
Yeah.
it's just part of it, but not the whole thing. Because
Yes.
the what makes it whole is the work that you previously do to have a successful strategy or outcome.
Yes. Um,
All right.
Avidel,
I think there's someone, yeah, that has a question.
Avidel, I've been trading for 8 years.
8
8
years.
years. 8 years, my friend.
And
Very.
also,
Yes,
Oh,
I'm here.
I was gonna ask if you. I was gonna say. I was gonna say. If you had anything to say about
Oh
relying.
yeah, yeah. On indicators.
Yeah.
yes.
Okay, I think I just have a few words for it. Well, indicators are lagging. That's one thing you need to understand. That because like when price has already moved, that's when the indicator moves. So why would you rely on something that's only tells you to enter when prices are already moved? Like it just needs to be used as a confirmation, like okay, because those are all based on mathematics. The people who made those indicators aren't dumb. That's one thing I can tell you. They aren't dumb.
Mm.
They were mathematicians, everything like that. But it doesn't mean you need to 100% rely on those. Like it's indicators are good when to re-enter a trend, when to spot a potential reversal, and a whole lot of things. But they are not leading indicators. Price is leading, news is leading, rumors are leading, so
Mm.
we are laughing. Rumors actually lead the market one way or another. So if they're speculating, they're talking, especially these ECB press conferences, when they talk about a few things like, okay, maybe late in the year we might cut rates, but that's not something we're looking for. Then like in 1, 2, 3 months, you don't need to worry about the cuts of interest rates, something like that. They have not yet put that out there, but they're just speculating that they might not be. So that kind of rumor actually helps you also make trading decisions. You know what's gonna come. So yeah, there's that. Hmm.
Yes, but I do want to say one thing,
Me too.
right? Because you were like, price is leading, and that is so true. But, like for example, for me, I love using the RSI to help me identify when momentum is starting to slow down. Now, there's ways that I can identify momentum in a trend slowing down just by looking at the trend. But sometimes I can't always tell. So the RSI, when I see the RSI doing something different than what price is doing, then I know that's, divergence. Is that what it's called, Barry? Divergence.
Yes, exactly. That's what it's
You know,
Okay,
called.
divergence.
but
But
with the British accent.
um right, but this is what I mean, right? I'm not relying on the indicator alone, but I'm using it in addition to what I'm seeing in
Mm-hmm.
price. Um so absolutely. We got some questions.
Yes, I was going to say that because I think Eva Green has a question. I don't know if I pronounced it correctly, but he has a question about the challenge phase, I think.
So we actually don't have challenges here at OFP. We're an instant funding firm. So that means that from the moment you purchase your account and the moment you receive your credentials, you can begin trading immediately and position yourself to earn payouts. As long as you stay within our rules and as long as you meet the guidelines for our inconsistency score rule, which all of that information is on our website,
It is.
then you can receive a payout without having to ever take a challenge. So I hope that answers your question. Um, okay, Agostinho. So let's see. For so long, I've been using moving averages. Unfortunately, it didn't work in a long time. Now I'm trying to focus on SMC. Okay. Okay. Moving averages are not bad to use, Agostinho, at all. But of course, as with all indicators, right? They have their place, and they shouldn't be relied on just by themselves. But what I do think moving averages can really help with is helping someone have an overall bigger picture of what a trend might be. Because most of the time they do tend to follow trend. But if you're trying to use moving averages to help you decide when to enter and exit trades, it's not always going to be consistent, if that makes sense. Barry, I don't know if you have any other thoughts on moving averages.
Same lagging indicator.
Mm-hmm.
That's my answer. Yeah.
Yep. But it's not bad
All
to
right.
use. It's not bad to have the moving averages. You just don't want to rely on them 100%. Maybe Agostinho, using moving averages in combination of you having your SMC concept, so the SMC approach to trading. So if you get really good with the SMC approach to trading, you may find a benefit of combining that strategy with EMAs. Okay. You may be able to find a benefit of using them together, just not one by itself. Does that make sense? Let us know in the comments.
Yes.
Awesome. Let's see. Let me scroll down.
I think
And I think that's it. I mean, that was just letting us know about his own
yeah.
how he approaches the markets.
Well, thank you so much for your comments, guys. Remember that at the end of my questions, you will have the freedom of asking anything that you want. But now I wanted to, like, now that we're talking about all of these details and the things that you need to put attention on. What would you say that are the essential features to look for in a good charting software? Just getting a little bit more technical, if you want to say it like.
Customization.
Okay.
What else? Barry?
Whatever comes to mind.
As long as I can use indicators, the price, I think it's fine. Yeah.
Okay.
Yeah.
For me, alerts.
Okay.
Being able to have a software that will help me to be able to better backtest.
Mm-hmm.
So I can backtest when I need to. But also alerts, right? Simply because I'm a swing trader, so I'm not always in front of my charts. Hello, y'all. I work full time. I get to talk about trading all day, so that's fun. But just because I get to talk about trading all day doesn't mean I get to be trading all day.
Right, of course. Yeah.
Obviously, I'm right here having a beautiful live with you lovely people. So, I have to be able to have something that will let me know when price crosses a certain point. So I know when it's time for me to kind of potentially engage a trade. Those are some things, but yeah, I'm with Barry, just being able to mark up my charts, and have those things that I need. Yeah.
That
And
sounds
user friendly.
right, of course.
User
Yeah.
friendly.
Like Trader by itself, it's not that easy, but just imagine by using something that it's, like harder to use. So that's why. And it has to have a user-friendly interface. So now that we're talking about this, what are some pros and cons of using these automated trading systems? Because it might sound, like something really good and perfect, but it might have some cons. I don't know, based on your experience. Whoever wants to go first.
Well,
So the question is
Like
you
by using these automated trading systems or technologies, what are some pros and cons of using
oh,
these?
okay.
Yeah.
Finally, with the questions that I was waiting for.
Okay.
Okay, okay,
Yours.
okay.
Oh, yours.
Yeah, EAs, robots, whatever you want to call them.
Mhm.
Yeah, so there's one thing that robots can do that humans cannot do. But again, I also think it's just that these robots that are created for trading are not really, what can I say, optimized for the markets and the changes and everything like that. Take, for
Okay.
example, daylight savings. You have an EA on, the clock goes back 1 hour, it will start to calculate its own different things and just totally get confused because it's programmed that way somehow like that. It will also not know if like elections are coming about, if it must reduce risk and whatnot. It doesn't know that. So it's something that you'd always have to go in, intervene, turn it off or change the settings one way or another. But overall, EAs are good for those who are like really busy and they want something that executes trades faster, I would say, like faster than us humans. So, like, if it's high frequency trading, yeah, there are robots which should do that. And if they're implemented well, yeah, they are profitable. But then there are times when the robot would not know that it's doing something wrong, something like that. But overall, my perspective on robots, they're good. They're good when you've programmed it well and your system is solid and you've programmed everything like that, then yeah, it should be profitable in the long run. Yeah, but you do also need some human intervention in that when it doesn't do the right thing so that you can know when to cut your losses and everything like that. Yeah. Overall, I would say they're good. They're good. I give them a 7 out of 10. Yeah.
Okay. That's
7 out of 10.
we love that.
That's
I
not
don't know if
bad.
you want to add anything, Rhea.
Yeah, no, I was just gonna say one pro that I
Mhm.
always think of, and I say this a lot when we get together and we talk, and that is the benefit of a robot is that once you program a robot to do something a certain way, it will majority of the time, 99.9% of the time, because nothing is 100% perfect. So, but 99.9% of the time, that robot will show up and do the same thing over and over and over and over and over again. And it
Yeah.
never has to worry about what? Emotions. Never, ever has to worry about
Yeah,
emotions.
you're right.
Yeah.
Well, maybe sometimes we should be like robots. Sometimes, though, not always.
Exactly. Exactly.
Okay,
That's
and now,
one of the
like,
downsides.
that's important, in especially in trading. But okay, and now, okay, now we've talked about some pros and cons about using these automated trading systems. But how can traders, like real humans, ensure that their automated systems are properly back tested and optimized?
Okay. Yeah, first of all, okay, let's probably talk about manual trading. How can you make
Mhm.
sure that your manual trading is optimized and properly back tested? First of all, you need to make sure the place you're getting the data from is legit and can span probably years back, like even 1970s, especially when you're working with automated systems. It's important that you have the past data that it can work from, like really, really, like they say 10, 20 years is good enough to back test. So manually, if you're back testing, you need to make sure you have all that data available. Because if you're back testing maybe 1, 2 years, that's not enough of data because markets change. There are so many factors that come in. There were wars before, some few years back, that changed a lot of things. Prices of oil, you name it. Yeah, coronavirus. Yeah, so yeah, those are things you need to like consider like in your trading system. So overall, like you just need to make sure that you have enough data and correct data. if you want to automate it. And you need to also set up something that prevents the robot from probably over trading beyond a certain point. If like 10% is the where you call it quits, you set it up that way. If it's 20%, you put it that way. Or if you're in a losing streak, it automatically starts to reduce the risk. Yeah, so everything like that. So once you have all of that done, yeah, I guess your system can work perfectly fine for the next coming years and generations. Yeah.
I think that's a really complete answer. But if you want to say anything else, Rhea, you're always welcome to do that.
Nope.
I think he said it all.
Yep.
Thank you so much, Mary. And now that we've talked about the pros and cons and things that might happen and how can traders use these trading systems correctly to, like avoid to know that they're properly back tested and optimized. I want to go on and like go back to the topic about mindset and like emotional and not like getting into emotional like negative emotions or impulsive decisions. How can traders use these technologies to manage their emotions and avoid impulsive decisions? Because one thing is like making sure that these automated systems are, like working correctly. But the other side of the story or the spectrum has to do with, like traders' mindset and like positive emotions to avoid these impulsive decisions. So how can they use this technology to manage their emotions and avoid impulsive decisions?
I ran up that one, Ria.
That
How you gonna do
stage
me
is
like that,
yours.
Barry? How you gonna do me?
Okay.
You gonna do me
Okay.
like how can traders use technology to manage their emotions and avoid impulsive decisions? I mean, I think this kind of goes back to what we talked about earlier about
Mhm.
how technology can help us have confirmation of what we're speculating. And so in that it can give us a boost of confidence when we're executing our trades. Um, so that's I mean, I think it just goes back to that. Um, Obviously, we should all have a trading plan when we're approaching the markets so that we know what we're going to do. Like when we see this, we're getting in. When we see this, we're getting out, So we should already have that plan and the tools that we're utilizing, the technology, the indicators, whatever it is that we're utilizing as part of our plan, that's just there to help give us further confirmation so that we can have that more confidence in executing our trades. And of course, if we're following our plan, we should be not in an emotional state when we're trading. I think anytime we get emotional or we get impulsive is when we get away from our trading plan. That's when we start kind of like everything's just out the window. We start revenge trading because we lost money. We want to get our money back and all this crazy stuff, which I don't think revenge trading is in your trading plan. So don't do it. So that's what I have to say. But of course, Barry, darling.
Okay. Well, yeah, like Ria's already mentioned, these indicators tools are there for confirmation. Yeah, so in terms of impulsive decisions, I just think somebody just needs to work on their discipline. In short, yeah, they need to work on their discipline, avoid trading. Like, I know, like when I don't know, somewhere I was reading something about like I've totally forgotten, but it talked about like when you are. Oh yes. It was actually talking about money. It wasn't even trading, but it was about money. It literally said that why most people like go broke faster is because they are always looking for that next gamble, which will just add a little to their portfolio. Not a lot, but a little because of greed and everything like that. Like the accountant said, he has literally seen a lot of people um be so successful to the point they have financial freedom, but just because they want more, they ended up fumbling it or in the end and losing everything. So same with trading. You need to reach that discipline level and avoid greed where you don't take those trades which you're not supposed to and just stick to a written system throughout. Yeah. And once you do that, you see your trading improve all in all because of the technology that's there. Like, come on, we live in the information age. You don't need to call up a broker. Come on, put 1,000 shares of ABC. Then it will take a few hours while price has already moved. Like things are just literally instant. So everybody needs to learn how to sit on their hands or stick to their written systems. Yeah, in short.
Definitely. And I think what you said can help traders, like you said, like develop a more disciplined and focused approach to trading, and maybe, like avoid these impulsive decisions that can be really common in, like when working on something like this. And maybe this can also help them, like filter and then, like reading better the real-time information to maybe, like, like avoid information overload. So maybe this can help them to analyze better the situation, the market, and then having better and successful trading strategies and overcomes and outcomes. So
Definitely. And that discipline does, like I said, that discipline does come with having your trading plan and sticking
yes.
to it. I will say that it helps a lot more to remain disciplined when you have a written plan for yourself, um, as opposed to you not having a written plan at all, and you're just showing up to the markets every day, and you're kind of like, well, I'm just gonna do whatever I feel like doing today,
Yeah.
you know.
That might not be the best idea.
So, but you know what? A lot of us who have been trading for any period of time, we develop discipline over time because we've experienced so much loss. Um, Sometimes we got to learn the hard way, right, Barry?
Yeah, definitely.
Sometimes the only way you figure out it's time to get disciplined is because, the markets smacked you a few times and it hurt. So that's the only way to learn, right? But eventually, hopefully, you learn and you get serious and you're disciplined. So yeah.
So that's why it's important to always, like, like be informed and have a winning mindset. Remember that, guys. And
Yeah.
resilience. We talked about resilience in one of our last episodes. So if you want to go back, that was really good. So if you want to get any information about this really important skill for traders, please go. You
Yeah.
can find all of our episodes in our YouTube channel. So those were all my questions for you guys. So now, if the people that are with us on this live have any other questions for you, please let us know in the chat, and Barry and Rhea will be happy to answer them, or any other comment.
Definitely. Yeah. Hassan, nice comment. I don't know what you mean by that or what you're referring to, but hey, I'm good in the kitchen and on the charts. So anyway, guys, thank you so much for joining us today. It is always a pleasure to get together with you guys, to engage with you guys, to talk about what we love and what we're so passionate about, right? Which is trading. And of course, our goal is to grow and to get better and hopefully reach our goals that we have. So with that being said, if you got any value from today by any chance, make sure you go ahead, give us a thumbs up on YouTube. And if you haven't already subscribed or hit that notification bell, go ahead and make sure you do that so that you can get notified every time we do go live. And other than that, Andrea?
Other than that, lastly, guys, stay sharp, keep a winning mindset, and remember that with Forex Focus, success is just one trade away. All
Just
right?
one trade away.
Thank you so much, guys, for being today with us.
All right. And we'll see you next week.
Bye.
Bye-bye.